Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 18th, 2024, and we're diving into Comerica's latest earnings report for the third quarter of 2024. Joining us is John, senior analyst from Smart Stock Watch. John, thank you for being here.
Thank you for having me. It's a pleasure to discuss Comerica's performance, especially given the current economic climate and the challenges faced by the banking sector.
Revenue and profitability overview. Let's start with the top line. Comerica reported a net income of $184 million for the third quarter of 2024, translating to earnings per share of $1.33. John, how does this compare to previous quarters?
Comerica's net income has decreased from $206 million in the previous quarter and $251 million in the same quarter last year. The earnings per share also saw a decline from $1.49 in Q2 2024 and $1.84 in Q3 2023. This reflects a challenging environment, but the bank has managed to maintain a stable net interest income of $534 million, with a slight decrease in net interest margin to 2.80%.
What factors contributed to this performance?
The stability in net interest income is due to favorable deposit trends and disciplined expense management. However, the decrease in net interest margin is attributed to higher interest-bearing deposit costs and lower non-accrual interest.
Operational efficiencies and future outlook. Comerica has emphasized operational efficiencies. Can you elaborate on their efficiency ratio and capital management strategies?
Comerica's efficiency ratio increased slightly to 68.80%, indicating a focus on cost management despite rising expenses. The bank's Common Equity Tier 1 (CET1) capital ratio improved to 11.97%, showcasing strong capitalization. They plan to resume share repurchases targeting $100 million in Q4 2024, alongside declaring $94 million in dividends, reflecting confidence in their capital position.
What does this mean for Comerica's future outlook?
Comerica's conservative capital management and strategic initiatives position them well for future growth. The planned share repurchases and strong capital ratios suggest a positive outlook despite the current economic headwinds.
Credit quality and risk management. Credit quality is crucial for banks. How did Comerica perform in this area?
Comerica reported net charge-offs of 0.08%, which is stable compared to the previous quarter. The allowance for credit losses increased slightly to $720 million, reflecting changes in portfolio composition. Non-performing assets rose to $250 million, but the bank's criticized loans remained relatively flat at $2.4 billion, indicating effective risk management.
How does Comerica's approach to credit risk position them against potential economic challenges?
Comerica's strategic diversification and prudent underwriting have resulted in strong credit results. Their conservative credit discipline and manageable criticized loan levels position them well to navigate potential economic downturns.
Strategic initiatives and business segments. Let's discuss Comerica's strategic initiatives and performance across its business segments.
Comerica's operations are divided into the commercial bank, retail bank, and wealth management. The commercial bank remains the largest contributor with $272 million in net income. The retail bank and wealth management segments reported $38 million and $19 million, respectively. Comerica's strategic focus on diversification and technology optimization is evident in their efforts to transform the retail banking model and enhance their technology platforms.
How do these initiatives impact Comerica's competitive positioning?
By aligning their business segments with strategic goals, Comerica is enhancing its competitive edge. The focus on technology and diversification not only improves operational efficiency, but also positions them to capture new market opportunities.
Key takeaways. In summary, Comerica's third quarter results reflect a stable performance amidst economic challenges. With a net income of $184 million and a CET1 capital ratio of 11.97%, the bank is well capitalized and poised for future growth. The planned $100 million share repurchase further underscores their confidence. John, any final thoughts?
Comerica's disciplined approach to capital management and strategic initiatives in technology and diversification are commendable. While challenges remain, their strong capital position and focus on efficiency provide a solid foundation for future success.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Comerica's performance in the comments below.